Right. Morning, everyone. Welcome back to Morning Kappa at 8. I'm Joseph here. Last week we had quite a lot of news flow. Firstly, a very quick catch up. Initially on during the Friday evening, right? We read that the Iran Foreign Minister, Mr. Abbas, have mentioned that the Iran is going to open up the Hormuz Straits, but after the next day, on the Saturday, right, the Speaker of the House mentions that they are going to close down the straits again due to the blockade by the U.S. Armed Force. And yesterday, right, Donald Trump have mentioned that U.S. have actually kind of fire a missile attack a tanker of the Iran, right? And right now, the U.S. have blocked out the waterway from the Iranian ships. And according to what he have actually posted, he's going to search on any illegal activities on the ship. And also follow up on Trump posting, right? Yesterday he mentions that both US and Iran is going to have a going to have a ceasefire talk again, version 2, right, in Pakistan today. But Iran have a dispute that they are not going to meet the US today, as long as the US continue to block up the Hormuz Straits. So I think the market from a very risk-on sentiment has become a very cautious mood. And this morning we noticed that the Dow Jones futures have pulled back about 400 points. Now, nevertheless, based on the last week activities, we can see that the Hang Seng have been moving upwards. They have climbed above both 20 and 50 days moving average, and is testing to cross above 600 point level. To recap, this 600 point level was the bearish breakout point that happened when the war breakout during the late February. Right now, the US index have actually went above. You look at S&P 500. S&P 500 right now have climbed above the 7,000 point level for the first time. It looks like the US have fully recovered the losses during the Iran war, and right now they are trading at almost at the all-time high right now. So sentiment is definitely very bullish at the US market. Also, you look at the Euro market, SXXP, which index that tracks the European index, also climb above the 620 point. Now, this is actually where the bearish breakout point happens when the war just started in the end of February, right? So right now, the Hong Kong market, which is Hang Seng, is trying to play a catch up on the US and also the European market. As for the trading stock this morning on the Hong Kong market, we'll be looking at a BYD 1211. Now, BYD have released their results about 1 or 2 weeks ago. Right, initially there was a profit taking, but right now BYD managed to recoup the lost ground and break past 110 resistance. So right now the BYD is printing a series of higher high and higher lows, showing that the bullish momentum is strong. The next R1 will be 115 and followed by next R2 120. Now supports 105. Secondly, we have Baidu managed to stage a gap up last Thursday, breaking past 120 resistance. So Baidu is heading towards 128 and followed by 135, and downside support is 114. Okay, both BYD and Baidu are the Hang Seng Hang Seng Index member. Then we look at the last week, while the US market have demonstrated a risk-on sentiment, we do see that based on the this stock heat map, right? The boxes shows that the value have been traded. Most of the funds are actually going towards Nvidia, Micron, SNDK, Microsoft, as well as Tesla, right? And the next group will be Apple, Amazon, AMD, Avago, Broadcom, Oracle, and Google. So it shows that the funds actually going for the big cap or the blue chip stocks right now at the S&P 500 so far. So as for Malaysian market, FPM KLCI dipped below the 20-week moving average. So we use a weekly chart to look at the long-term trend on our market. Right, we do see that right now the FPM KLCI is below the 20-week moving average, and nevertheless last week the FPM KLCI managed to bounce off 1685. Now, if this week it managed to climb above the 20-week moving average, the sentiment would be bullish again on the FPM KLCI. Now, on the downside, we think that the major support should be at 1645. So as long as the FPM KLCI stay above 1645 on a midterm to long-term basis, FPM KLCI should remain bullish. Now, last week, there are three sectors that have garnered the market attention. Firstly, tech stocks. Technology index went up by 8%, construction about 3.6%, and followed by property 2.8%. Now, as for the FKRI, right, on the trading basis, we still keep bearish buyers until the FKRI managed to break past 17220 point. Now, FCPO, right, we think the bulls are still in control. Now, with the stop loss point at 4,004. Now, as for Malaysian market, last week we do see that Ztrix have rebound by 12%, followed by the Gamuda 9%, and also the leader in the tech stocks, Inari, that went up by 12%. Now, meanwhile, the IOI properties have led the index to move higher. Now, over the week, IOI properties had rebounded by 14%. Now, as for trading stock this morning, Malaysia market, we're looking at Mr. DIY, break past at 1 ringgit and 60 cents. R1 would be at 1 ringgit and 70, followed by R2, 1 ringgit and 80 cents. Downside support is at 1 ringgit and 50. Then on, we have the time.com, eyeing to break past 6 ringgit and 5 cents. Now, should this breakout happens, Timecom will be climbing towards 6 ringgit 30 cents and followed by the 6 ringgit and 55 cents. Downside support is 5 ringgit and 80 cents. So we have Mr. DIY and Timecom. Mr. DIY a breakout stock and Timecom a pending breakout. So I stop here and pass on to Sian on the Rasa Mingguan report. Thank you.
Thanks. Good morning, everyone. Please allow me to share my screen. Okay, I hope you can see my screen now. So basically, as what we have published our Pathfinder for the second quarter in last Friday. So in the Pathfinder itself, we have revised the global GDP growth to 3.3% from a prior 3.5%. So taking into consideration of the current Middle East tensions. So we have painted three scenarios that we think could happen, with our base case being that there is a perpetual ceasefire, with the ceasefire persist beyond the stipulated 2-week time frame, with no further escalation in the geopolitical premiums for the rest of the year. So in our base case scenario, so we do expect that there will be one US federal rate cut, FFR cuts in this year. So balance of rates towards 0. So with the dollar index to trend between 95 to 100 into the year end. So for more details, please read our Pathfinder for the second quarter as well. So at least as per last Friday, we also seen that there's an improvement of the risk sentiment as well, as actually highlighted in our risk sentiment index, where it have moved sharply towards the risk taking territories, where in last week we have also advocated on overweight on US and also ASEAN equities. So the risk sentiment index too rose sharply towards the risk-taking environment, so suggesting that investors are turning more optimistic. So we have also observing there's a short covering behavior as in the global equities and also bond flows as the risk appetite improve as of now. So the geopolitical tension is still quite fluid of now. So over the weekend, So Iran do reimpose the restrictions in the Straits of Hormuz, and as a result of that, the oil price do surge to around $95 per barrel in this morning as well. So the geopolitical condition is still quite fluid as of the geopolitical tensions situation is still quite fluid as of now. So swap pricing on as what we see is also is also, as per 15 April, is also indicated a strong 41 probability for one FFR cut by the end of this year. So overall, generally, we still seeing material improvement in the risk taking appetite as per last Friday as well. So, however, so the elevated oil prices do have some impact already on some of the regional economies. So specifically, China producer price do increase by 0.5% on year-on-year basis in March, which also marks the end of the factory deflation after more than 3 years due to surge in global commodity prices. So in ASEAN, Philippines has also recorded inflation of around 4.1% in March, which is the highest since July 2024 amid a significantly higher fuel prices. So based on our ASEAN CPI heat map, so higher oil price have also impacted some of the ASEAN economies, so which including Philippines, as I mentioned earlier on, and also South Korea, which are the net energy importers. So on the US end, so inflation is also picking up. So with the producer prices up by 4%, the CPI up by 3.3%. Price momentum has rising into March as consumers is facing a higher energy prices as well. So as what I mentioned earlier on, so higher inflation is seen in tandem with elevating producer prices due to the elevated commodity prices. So back to our Pathfinder forecast. So in our base case, where we assume that there's a perpetual ceasefire with oil price eventually back to around $80 to $90 per barrel. So in this case, we'll be able to maintain most of our macroeconomic forecast with US GDP growth at around 2%. For this year, we are looking at Malaysia GDP growth at around 4.9%. So based on the advanced estimates as released in the last Friday, the GDP growth for the first quarter is affected by the geopolitical tension so far, and also better than what we expected, grew by 5.3% versus our in-house projection of 5%. So for the rest of the year, for average 2026, so we do look at the GDP growth at 4.7% under our base case scenario due to still a robust domestic fundamentals, although we might see some pressure on the producer end in this year due to elevated commodity prices. So other than that, CPI in Malaysia, we are looking at 1.8% of CPI. And for US, we are looking at a higher inflation pressure at around 3.5% in this year. So on policy rates on US, we're looking for a one FFR cut under our base case scenario. So with Malaysia, we think that the OPI is likely to maintain at around 2.75% in this year. If the inflation do fall within the projected range of around 1.5 to 2.5% by Central Bank Malaysia. So FX for ringgit, by the end of this year, we are looking at ringgit around 3.96, while the dollar index at around 97.8. So should the geopolitical tension do escalate at least throughout third quarter in this year, and with there is a significant disruption to the supply chain, and also the oil price eventually surge to $140 per barrel. So we think that there could be more adverse impact on the global and also regional economies. So with the US GDP could potentially slow to 0.5%, and Malaysia GDP could potentially slow to around 4%. However, robust fundamentals could also, and also if there's a continuation of the subsidy, could also cushion some of the potential shock as well for Malaysia economy, as Malaysia economy is still relatively resilient at 4% when you compare to our base case of 4.7% as well. So for CPI, Malaysia CPI could, if other things keep constant, could potentially rise to 3.2%. So with US CPI at 4%. So in this case, So we do not rule out there's a possibility of a central bank to actually raise the OPR by around 25 basis point under this prolonged tension scenario. So back to the long-term average of 3% in this year. So, and then moving on, speaking about Malaysia GDP, as I mentioned earlier on last Friday, we also seen that there's a release of first quarter advanced GDP where it grew by 5.3%. So economic performance in the first quarter was supported by expansion in services, manufacturing, construction, and agricultural sectors as well. So growth going forward will also be supported by resilient domestic demand and continued resiliencies in the E&E exports as well. Currently, Malaysia appears to be the least affected among the ASEAN economies under the current conflict scenario. But should there is a prolonged or intensified escalation, which could potentially lift the oil price further, it might actually have some dampening impact on the growth, with the 2026 GDP growth may ease to around 4%. So our base case in this year is still maintained at 4.7%. So in view of current situation for now. So inflation-wise, we have also seen that there's a release of inflation for March in last week as well. So we're coming at 1.7%, which is slightly higher than February print of 1.4% due to higher transportation costs seen in March. So for the first quarter, inflation remain moderate at around 1.5%, but risks are tilted to the upsides amid ongoing geopolitical uncertainties, which could continue to support the global energy prices as well, which could also result in pass-through effects if elevated crude oil price persists. So that's all for me. I will stop here and pass the line to the next presenter. Thank you.
All right. Good morning, everyone. So today we have a company updates on two companies, which is Gamuda and Suncon, which both secured data center contracts on last Friday. So for Gamuda, it secured a 1.7 billion contract from a hyperscale data center developer for a data center in Port Dickson, Negeri Sembilan, while Suncon secured a 1.8 billion contract for a DC from also a hyperscaler, but that DC is located in Bandar Serendah, up north of Selangor. So in terms of the job scope for both data centers for these contractors, it includes core and shell plus mechanical, electrical, and plumbing fit-out works. So basically, it's not, I mean, it's it's different from certain contracts whereby the core and shell is awarded first, and then only the mechanical and electrical works are awarded. So looking at Gamuda, this is its I think its first win for calendar year 2026, and it brings the year-to-date FY26 wins to about 15 billion versus our 20 billion ringgit target replenishment for FY26 year ending July. For Suncon, it has year-to-date FY26 wins now stands at 3 billion ringgit versus the target of 6 billion ringgit for FY26, which we view is also with easily achievable, given that the DC prospects in Malaysia continue to be resilient, especially with hyperscalers being a bit more cautious in the Middle East. So for Suncon, we understand that this could likely be the very first DC award in Serendah, and maybe because of that, we don't discount the possibility of Serendah being a new DC area, just like what happened for Negeri Sembilan, for example. Nilai, aside from Port Dickson, Nilai also is seeing some form of data center development along with Malaysia Vision Valley that has seen certain DC investments into the area. So all in, both contracts for DC contracts for Gamuda and Suncon are within our job replenishment assumptions for both companies. So with that, we make no changes to our earnings estimates. For Gamuda, we see that aside from the DC story, given that data centers currently make up about 10 to 11% out of its total 45 billion order book, we think that Australian renewable energy projects should continue to remain resilient, especially in light of the global energy supply shocks coming from the Middle East tensions. And for Sunway, we view that its focus would continue to be on data centers, given that Suncon has the strong edge in data centers, and because of that, and with a strong track record, that should enable Suncon to continue securing new DC projects in the country. So that's about it, everyone. Thank you for your time. I think I'll pass on the floor to the next speaker. Thank you.
Thank you, Adam. So let me just continue with a report on Inari Amerton. So basically, this report is an update on the proposed acquisitions on Lumileds. I think Inari has announced that it has terminated its planned acquisitions after failing to meet regulatory approvals by the US authority. We view the entire development as neutral to fundamentals, as it does not affect the earnings forecast nor the net asset assumptions. However, we do believe that this termination is a mildly positive for sentiment, given the market's previous cautious stance on the deal, as evidenced in the share price performance post deal announcement. The termination actually stemmed from the unresolved national security concerns raised by the Committee on Foreign Investment in the United States. Now, remember that we previously were neutral on the new acquisitions, but were rather positive on the medium term, as we previously believed that the deal would have enabled Inari to diversify its revenue streams, move up the vertical integration, as well as improve its ROE, as well as leveraging on Sun'Un's technical expertise. However, moving ahead, to outlook, I think we expect 2026, ending June, to remain soft, weighted by a lower radio frequency component allocations, as well as depreciations of our US dollar. This will be partially cushioned by the cost rationalizations efforts, as well as the natural hedging from certain cost components coming from US dollar. Going into FY27, we think it's shaping to be significantly a better year. We anticipate higher RF allocations driven by three potentially catalysts. First, the new smartphone cycles, which may incorporate the in-house 5G modem designed, could reconfigure the RF front-end modules. So these potentially could give Inari customers a potential better allocations or higher different designs compared to the previous models. I think secondly, a potentially higher volume from new foldable phones, which also entails entirely new designs. Thirdly, I think the supplier diversifications amidst consolidations among the key suppliers between Skyworks and Qorvo. Meanwhile, the datacom segments on the optoelectronics, I think 17% of the first half 26 revenue continues to accelerate its growth as customers advance the development of laser chips, which are essential for the energy efficient data center connectivity. We do maintain our earnings forecast as this has no impact to the numbers, but we raised our target price to 2 ringgit and 1 cent. It was 1 ringgit and 81 cent. This is after we revised our target multiple to 30 times from 28 times previously on CY 26 earnings. This is actually in line with our local OSAT peers. The renewal of deal-related Horng, as well as our expectations of a better FY27, could brings growth catalyst to the stock price from in our view. Additionally, we do also marginally increase Inari ESG scores to 3.2. It was 3.1 previously. I think this is mainly driven by the improvement in the environmental matrices, which including the reduced scope 1 emissions, as well as its recognitions of a gold award at the ESG. So we maintain buying on the stocks at 2 ringgit and 1 cent type of price. I think that's all from us today. Thank you for listening. We should see you tomorrow.